So, welcome again to this, and in this, we are going to do today, in continuation with basic concepts, we are talking about national income, and in this, we are going to do investment. What is investment? That we'll find out. It is the capital formation. The other name for investment is capital formation. So, let's find out what is capital and capital formation. So, for any production activity to go on, we do need capital. And for it to really continue, we need that investment. It should go on. I mean, there has to be a formation, capital formation. So, I want you to see this. So, look at this as we see that. So, investment addition made to the stock of capital during a period is called investment, and it is also called capital formation. So let's take capital. To understand capital and investment, just let's understand this concept. See, both capital and investment is made up of capital goods, but if you take the accounting sense, it is different. They are different. Production units purchase new capital goods every year, and these go on accumulating year after year. Now, the accumulated stock of capital goods at the beginning of the year is called capital. But the capital goods added to this capital during the year is called investment. So that is the basic difference. Now, to take an example, quoting here, suppose capital of a firm at the beginning of the financial year is rupees 10 crores, and at the end of the year it is rupees 11 crore. This addition of 1 crore during the year is investment. The beginning of the year capital of rupees 1 crore, and at the end of the year capital is rupees 11 crores. So I hope you've understood what is really the difference between capital and investment. So when we come across this investment, we talk about fixed investment and stock investment. Now, what is fixed investment? So these are the two components of investment. Investment in fixed capital like durables is called fixed investment. So fixed, like we can call it final goods, otherwise fixed goods, fixed capital goods, like that is it, it's a final good. And on the other hand, which we've already done, investment in stocks of raw materials, semi-finished goods and finished goods, and this is referred to as stock investment or inventory investment. So these are when you're using intermediary capital goods. So producer goods as is. So producer goods, sorry. So that is intermediate goods. So once again, let me just talk about fixed investment. Fixed investment is what? It refers to an increase in the stock of fixed assets of the producers during a year. For example, expenditure on purchase of capital goods like plant, machinery, building is called fixed investment. And this is also referred to as fixed capital formation. Now let's take inventory investment. What is this? It refers to the change in the stock of finished goods, semi-finished goods and raw materials during an accounting year. And this inventory of such goods is essential to meet the rising demand. And inventory of raw material becomes necessary to avoid the situation of short supplies. So sometimes what happens is an undesired stock investment. That means there's too much of stock lying with you. So this often happens when the when the market conditions turn unfavorable. For some reason there is no demand in the economy, then there is a lot of supply there lying just to be lying unsold. So then what? That is what happens. And so this is what is this. You can just have a look as to what I've written as durable and durable goods and non-durable goods inventory. So for all this now, what we also study is, that is, gross versus net investment. Often a distinction is made between gross investment and net investment. But to study this, we should know what is the concept of depreciation or consumption of fixed capital. And that's what we will do in the next class.